Hello friends, welcome back. Today is going to be a very exciting tutorial on Claude plugin in Excel. So this Claude plugin in Excel was launched by Anthropic a couple of months back, and since then I've been trying to play around with it to figure out what exactly it can achieve. And for those who don't know me, I'm an ex-JP Morgan analyst and I'm also the co-founder of WallStreetMojo. I've created hundreds and hundreds of financial models, and one thing that caught my eye when it came to this Claude plugin is that it claimed that it can build models or fill existing templates. And if you see this here, it can draft financial model from scratch based on our requirements. So as an expert in financial modeling and someone who does this financial modeling day in, day out, I had to know whether this is true or not. And if it is, then it will be an amazing add-on for those guys who are trying to learn financial modeling from scratch. And this can make analyst work so easy. So today's tutorial will be all about testing Claude plugin in Excel, whether it can create a basic financial model, the three-statement financial model, that is the income statement, balance sheets, and cash flows from scratch or not. So if I am satisfied with the output, in the next video tutorial, I'll take it to the next level where I will test whether it can do the advanced financial modeling. So for today's video, it's all about understanding whether it can get the basic job done or not. So here is this Excel sheet where I'm going to kind of create the three-statement financial model. So by the way, if you want to install this Claude Excel plugin in Excel, right? So you can just go here, claude.com/Claude for Excel, and then you can click on install now. It's kind of pretty simple, straightforward. You just click on get it now. It's kind of rated 2.6, kind of very low by any standards, but still I want to kind of test if that is true or not. All right, so once you log in and do that stuff, basically you will be here, and in the home page you will find that there's this open Claude plugin that will come in, and once you are inside, you will be expected to log into your account, right? One important thing which you need to understand regarding Claude is that it's not available for the free users, so you have to become a pro member at least to get access to this plugin. Okay, so with that, let's get started. So as I said, the overall scheme of things here is that to create a very basic financial model from scratch, I'll just give a prompt and I will leave it to Claude to actually do the stuff. So once the model is created, I will audit each and every element of this financial model as an expert and see what went right and what went wrong. And, I'll kind of rate this financial model out of 10 as well. So let's get started here. I'll start by writing the prompt, and the prompt is kind of very simple. I'll just kind of say that, okay, create a simple three-statement financial model from scratch of a dummy company, and which includes the following. And let me get started by saying that, okay, I need 2 years of historical data. Okay, and then second I need is 5 years of projections. Okay, now tabs should consist of assumptions, income statement, balance sheet, and cash flows. All statements should be linked appropriately as per the IB standards, right? And what else? Color formatting, blue for constants and black for formulas, and maybe green for cross reference across tabs. Okay, so this is what is the basic prompt, and also maybe I can ask Claude to give me an explanation of the financial model, explain the model at the end. Okay, so this is a very basic prompt which I have given. I just wanted to see whether it gives this basic thing appropriately or not. So let's get started. I'll just press enter, and okay, so it started thinking, responding. So okay, so it's planning. So let's go ahead and look at what it has planned. So here's my approach. Okay, so first thing is Claude wants to create assumption, income statement, balance sheet, cash flow tabs. Okay, so deny. If you deny, it doesn't work. So anyways, you have to allow. So allow once, and I think that should be fine. So as you can see here, the tabs are kind of ready. Okay, so assumption tabs, it's going to create revenue growth, cost. Okay, so it's kind of giving us a plan as to what it will do. Income statement, balance sheet, cash flows, all statement will be interlinked. Okay, so as far as my command goes, it's kind of understood in a pretty sensible way, right? So blue is hard coded numbers, black is formulas, green is cross reference. Perfect. So step one, create all tabs. I think it is already done. Now let me build these tabs, right? It's done. Build the assumption tab. So let me see if the assumption tabs are kind of ready. All right, so it started building the assumption tabs as well. Okay, now let me build out the assumption section, revenue. So, I mean, so far, so good. I do see interesting things here. Revenue as a growth rate. All right. So I can see that the assumption sheet is kind of getting populated. The revenue, okay, by default, it is giving me in the INR. So that's okay. I mean, I didn't specify, which currency which I want it to be, right? So yeah, one thing which I do see challenging is that the year is 2023-24 and 2025 is the estimate. I mean, I'll still give it the benefit of doubt that I didn't specify the years. So it didn't take the default as 2025 actuals and then 26 onwards as expected, estimated, but it's still fine, right? So assumption sheet, I can see that it's kind of neatly formatting and everything. All right, that sounds good. Margin assumptions, this is how a typical margin assumptions are taken as well. Cost of goods sold as a percentage of revenue, selling general and admin expenses a percentage of revenue. Sometimes it's as a percentage of operating costs as well, but it's fine. I think since it's a basic model we are talking about, it's absolutely okay. Depreciation and amortization and capex. Usually it's a very complex model, but of course we were trying to create a very basic fundamental model here, so it should be fine. Working capital assumptions, I do see it's kind of taken appropriately, like the days sales outstanding, days inventory outstanding, and days payable outstanding. I think it makes sense. Tax rates, interest on debt is 5% and mandatory debt repayments. It has kind of estimated as to how much will be the debt repayments. Dividend paid is a certain number here, and interest income rate, right? Like whatever will be the cash and cash equivalent, 2% on that. So as far as the assumption sheet goes, I do see that it has done a great job, and the formatting as well, I'm kind of impressed. Wow, that sounds nice. So let me check, where exactly it has gone ahead with. How about the income statement? I think it's still going on in terms of populating and working on the income statement, right? So it's kind of following the conventions as well. Okay, perfect. Balance sheet and cash flows, it is still yet to kind of make, but for now, it's kind of working on the income statement sheet. And what is impressive, I see, is that, okay, one issue which I noticed here is this is dollar millions, right? And unfortunately, the default assumption was that it's kind of in Indian rupees, right? So maybe that is something which I have to be aware about. But as it's kind of creating on this financial model, let me quickly audit this as well as to whatever it has done until now. I can see that the revenue is coming from the assumption sheet, right? And in the assumption sheet, the revenue was calculated. Perfect. So I think this is the right approach. You first calculate the revenues in the revenue built up sheet. Usually it's a separate sheet altogether when it comes to the complex financial models. But here, I think since it was simplified, yet it calculated the revenues here and linked it here, which is green color coded. Makes sense, right? Cost of goods sold, again, it did the same exercise. I am seeing this, right? It's 58% of the revenue. So let me check as to how it is calculating, right? So it is 58% of the revenues. Okay, I think gross profit margins, it's kind of increasing. Selling general and admin expenses, All right, selling general and admin expenses are also linked to the assumption sheet as a percentage of revenue. R&D expense also as a percentage of revenue, and depreciation expense as a percentage of revenue. So we get this total operating expenses. I think so far so good. We've reached the operating income, and operating income, I can see that it's gross profit minus the operating expense. All right. I mean, this looks interesting and impressive to me. Okay. Started kind of formatting this as well. Interest income and interest expense usually comes at a later stage, so it's kind of left blank. I'm kind of impressed with this as well, because the approach of doing financial modeling is that debt eventually comes at the very last, and when we have those debt ending balances, from there we calculate the interest expense and the interest income. So I can see that it is kind of linking it to the balance sheet, and the balance sheet is still not here yet, so it will eventually come, right? So let's wait. But until then, we can kind of go ahead and audit the income statement. Okay, so I do see one, right? This will continue once we have these numbers. The earnings before tax will get adjusted, and the income taxes. So let me just quickly check if it is linked to the right numbers. Like E24 is the tax, income tax assumption. Here is E24. 24 is the tax, right? 25%. Okay, so it does make sense that it has calculated this net income, and the net margins overall is coming out to be 12.2, 13.3, 14.4, and so on and so forth. It seems like I'm seeing this interest income number, so maybe some cash flow data is here. No, not yet. All right, so it seems like this is coming from somewhere. Eventually it will come, right? So let's see. Let's wait for this balance sheet to get populated as well. So I think it has been more than 5 minutes until now, and it's still doing the work. So for now, as I can see here in the comments, build the income statement, it has kind of completed that. It has moved to the step number 4, which I can see. It's kind of calculating the balance sheet, right? Now, if you look at how the balance sheet is getting created, it's very interesting to see the assumptions in place. Like the account receivables are kind of linked to this days sales outstanding, right? Days sales outstanding is 45 here. Okay, so that's how the account receivables is calculated. Like if you go to that working capital calculation, it's basically on the basis of inventory turnover and the sales outstanding. So I mean, if you quickly just do a basic foundational check, 45 days of the revenue is account receivable. So that's how it's kind of calculated. 45 divided by 365 multiplied by the revenue will be account receivables. Kind of formatted this as well. I'm impressed here. Okay, so here I see that this is done, in fact, the balance sheet. Okay, so for now, there is this difference of 23. Is the cash flow complete yet? No. This is how we progress. I mean, when we are doing manually as well, we kind of not fully complete the income statement, but we move from income statement to balance sheet, and then bits and pieces of cash flows, and then come back and then complete the rest of the stuff. So you wouldn't find this balance check 0 as soon as you complete the balance sheet. It's actually the last step, and that's what I'm looking for, that once the cash flow statement is complete and all the linkages are appropriate, I should see this balance sheet numbers, this balance check, that is the assets are the equal to liabilities and equity. This should be equal to 0 then. Okay, until it pans out the cash flow statement, let's now kind of look at the other things, which is the inventory. Yes, inventory is fine. Other current assets, I do see this as a hard coded number. So I'll come back to this and see how it has kind of taken this in the cash flow statement. So I'll mark this, maybe I'll just keep this as yellow marked, right? Because it's a constant. I need to do this auditing. How about the net property, plant and equipment? So here you can see that this is the capital expenditure, right? Assumptions into E16. What is E16? I believe it's the capital expenditure here, right? Yeah, E16, 6% of the revenue is capital expenditure. So we do see whatever was the previous net PPE and the depreciation, right? This is the depreciation you can see here. So subtract the depreciation and add the capital expenditure. So this is how it works out to be. It's a very simple base equation. So I'm not getting into the foundational aspects of whether how do you go about doing it. I presume that you are already up to speed on that part. But yeah, this formula seems to be fine to me. And then again, non-current assets, this has been kept as constant. So for now, again, since this is a manual constant number, I'm just kind of highlighting this so that I'm aware when I do the final audit. Okay, now coming to our accounts payables, again, the same thing. What went on for account receivables inventory, we'll use the same working capital assumptions, days payable outstanding. And on that basis, let me just quickly check if it is on the basis of cost. Yeah, it's E6 and that's what it should be, right? It's on the basis of cost, right? So this is also perfect. Accounts payables, long-term debt. This is previous debt minus the assumption E26. What was the assumption in E26 here? Mandatory debt repayments of $10 million, maybe whatever. Yeah. So yes, so we do see that it's properly linked. And other current liabilities, again, this is hard coded number. I would love to see what and how it is kind of reconciled in the cash flows. Common stock and additional paid in capital, it remains constant until anything happens at the fundamental level. So it is fine, but I'll still mark this as yellow highlight. And retained earnings, this should be previous year's retained earnings plus whatever is the net income minus the dividends, right? So let me check. Dividends was kind of mentioned here. Okay, we have the absolute number in terms of dividends. So dividends are kind of hashed, and E25 is the net income. Okay, so where is this E25 here? E25 is the net income. All right, so I think balance sheet again is kind of surprisingly doing okay. And now I see that the balance sheet check is also zero. So I'm kind of super eager to see how cash flow statement has been done. Kind of so far, I'm impressed. Claude, you're doing an excellent job here. Let me now go back to the cash flow statement and see what you have done. So I hope that you have not done anything manual here. Everything should be green because it's coming from the different sheets, right? Just remember, guys, even those who are new to financial modeling, please note that cash flow is just the outcome. Okay, so every number which you will find here within the cash flow statement will be sourced from the income statement or the balance sheet. So usually this is referenced from other tabs, so therefore this green color code is expected, and that's what I'm seeing here. So this seems fine, right? So this is net income. Obviously, this cash flow from operations is calculated using the indirect method of accounting. So it starts with the net income, all right, and then changes in working capital are kind of taken care of. And yeah, this is where the other current assets and other current liabilities are kind of, that its changes are kind of accounted for. So let me check if this makes sense here, because yeah, so there was the difference of 1 rupee here, right? So yeah, it goes as an outflow because this assets have increased, right? So assets increase means there's a cash outflow and it has been appropriately taken care of. Similarly, let's look at the other current liabilities here. What do we see in the other current liabilities? Other current liabilities have increased by 1. Okay. So here, what do I see? Increase and decrease in other current liabilities. This was 2. Okay. Let me check. Yeah. From here to here, it is 2. From here to here, it is 1. So therefore, this is 2 and this is 1. All right. I think these linkages are fine. Cash flow from operations. Perfect. So far, so good. Capital expenditure is a straightforward aspect, right? Net cash from investing. Again, good. So you're doing a great job, Claude. Debt repayment. Debt repayment was given as an assumption. Fine. Debt dividends paid is also taken care of. So we have this net cash from financing activities. I think this is also fine. The beginning cash was 65. Okay. So see, just a quick thing. whatever we are getting here, right, ending cash, this should be the beginning cash. Okay, at this stage there is a difference which I see here, and maybe there is some issue in the previous historical numbers. Now this they have taken, I mean, this model has taken directly from the balance sheet, right, 65 here. And if you really look at this ending cash balance here, this should be equal to the balance sheet cash and cash equivalent. So there's a difference of 3, right? And it has to be kind of looked at as to why this is so. So there's some error here, which it is there in terms of the historicals. But, I've seen students making a lot of mistakes here as well, that, they manually calculate this cash flow statement for the historical years and then probably use the incorrect number, and then the balance sheet never balances, so it kind of becomes tricky. Anyways, so coming back to Claude, this is one error which I could spot, and the net change in cash will be equal to cash flow from operations, investing and financing activities. Okay, so I'll add these two up. Now this is correct, right? $65 is correct. 65 rupees here is correct because it's directly taken from the balance sheet reported numbers. Okay, so we get this as 88, and similarly we kind of continue, right? So now if you see this here, this 88 is matching with this 88, right? So for the subsequent years, this beginning balance works absolutely fine. And I think from the cash flow historicals, there is one error, but from the forecast point of view, no errors I could spot, right? So I think it would have kind of finished this assessment, right? Okay, so perfect. All right, so I think if I have a look at it, Claude has done an exceptional job in terms of formatting this, because with my basic set of assumptions, like color code them in blue and make these as a 4-tab thing, like assumptions, income statement, balance sheets, and cash flows, it has done an amazing job. And only one error which I found, I think I can ignore it as well. But since we as an analyst, are kind of finicky about data and numbers, even one error can lead us to costly mistake, right? But yes, I will give it a go ahead. I think in my next set of video, I'll try to kind of give it a more detailed set of assumptions, more thought into how a financial model needs to be created, slightly more advanced, and I'll see, how Claude does that job here. So finally, I did ask this model, I mean, the Claude, to kind of explain me everything as well. So let's see how it did in terms of explanation. So I think it has done a beautiful job here as well. The model tells a story of improving profitability through margin expansion, cost of goods sold declining from 60% to 54%, SG&A from 20 to 16%, while revenue growth at a decelerating rate, 8% to 5.5%. Perfect. I think, kind of a commentary as given by analysts as well. So guys, I will continue to test Claude for the 3-statement financial model for these advanced usage cases. I hope you liked this video or this rundown of how Claude can be helpful for doing financial modeling. And yeah, I think this doesn't take away the fact that you need to learn the fundamentals of financial modeling. So, this dump you will get this basic financial model, but are you really aware as to what is flowing from where, right? So you should not be in a situation where you don't know financial modeling is, and you're presenting this to your associate, or maybe your managing director, that this is what you have created. A single a question from them as to what this is, or maybe, as you saw, this small error here. Think about $1 million decision based on the Excel sheet which you are just giving without understanding what that is, right? So this means at the end, it's very important for you to also understand the core fundamentals of financial modeling, and I urge all of you to actually learn that, practice that, because these AI tools, all of that are kind of more, they will become more and more advanced. But the fact of the matter is that it will ultimately it's still error prone, right? And Claude will give a disclaimer. But how about you making a $10 million investment based on this with, let's say, not inaccurate data, but let's say if it has some linking errors, so then what will we do, right? So I mean, just be cautious on that aspect of it. Otherwise, I think it's a perfect thing to kind of, take it ahead, learn, and do more about it, right? I hope you liked this video, and do give a thumbs up if you have liked this video, enjoyed this video, and learned something from this video. And as I said, I continue to, bring in more tutorials on this in the near future. Please do subscribe to my channel, Wall Street Mojo, and I hope, if you click on the bell icon as well, you will get notifications of our future video tutorials as well. All right, so until then, next time, I'll see you in the next video.